Okay, so let's just dive right in. We all see candlesticks on our charts, right? Every single day. They're supposed to be this amazing tool to predict the market. But let's be honest, for a lot of traders, they just lead to confusion and a whole lot of losing trades. Well, today, we're going to fix that. We're going to talk about how to actually read them the right way. What if I told you everything you know about candlestick patterns is a lie? I mean, that's a pretty bold statement, isn't it? Hammers, dojis, those famous engulfing patterns. The problem is, the way most people use them is just completely wrong. They treat them like these little magic signals that are supposed to print money. But that's not how this works. We have to go deeper. You know, the biggest myth out there is that these patterns are like cheat codes in a video game. You spot a bullish engulfing candle, you blindly hit buy, and then you just watch in horror as the price goes the other way. The reality, each and every candle is a word, and when you put them together, they form a sentence, a story. So our job isn't just to be a pattern spotter, it's to actually read the story the market is trying to tell us. So how do we learn to read this story? Well, like any new language, you start with the alphabet. And the good news is, the entire language of the market is written with just 3 core types of candles. Seriously, that's it. Once you master these 3, everything else just clicks into place. First step, we've got the most powerful one of them all, the strength candle. This is your sign of pure unfiltered conviction. When you see a big full body with tiny little wicks, it's telling you that one side, either the buyers or the sellers, is completely dominating. There's no argument, no fight, it's a statement of absolute control. And believe me, with these strength candles, size absolutely matters. A small little body shows a bit of control, sure, but a massive chart-dominating candle, that's a shout, not a whisper. It's a clear message of overwhelming, undisputed power. The larger the body, the more in control that side is. Next up is the control shift candle. You might have also heard it called a reversal candle. Now, the key to this one is that long, pointy wick. That wick is like a fossil record of a failed attack. It shows you exactly where one side tried to push the price, but the other side came in and just slammed the door shut, completely taking over. This is where you can spot a potential change in momentum. And finally, we have the indecision candle, which a lot of people know as a doji. Think of this as the market hitting the pause button. You've got a small body and wicks on both sides. It's basically a perfect tug of war where buyers and sellers fought to a complete standstill. No one won. Now, this candle by itself doesn't tell you where the price is headed, but it's a huge warning sign that a big move could be just around the corner. And this brings us to the most important point of this entire explainer. You never, ever trade based on a single candle in isolation. It just doesn't work. The real magic happens when you start combining them, when you start putting the words together to understand the full context of the story. And the process for reading this story is actually pretty simple. It breaks down into 3 steps. First, you spot the indecision. That's the battle, the tug of war. Second, you wait patiently for the confirmation, a big strength candle or control shift candle that tells you who won the battle. And only then, once you know who's in control, do you move to step 3 and start planning your entry. Alright, enough with the theory. Let's see how this actually works on a real live chart. We're going to go through this together and read the story of the market, candle by candle, exactly as it unfolds. Okay, so here we go. We can see the price has been moving down, but then look closely right here. What do we see? 3 indecision candles all in a row. The market is hesitating, it's hitting the brakes. And notice that one of them has that long lower wick. That's a little clue that buyers are starting to wake up and push back from below. And then, what happens next? Boom! Right after all that hesitation, we get this massive green strength candle. This is our confirmation. The indecision was the question, and this huge candle is the answer. The buyers have won the fight, and they didn't just win, they won decisively. Now, this brings us to a really crucial concept, speed. Check this out. It took sellers 22 candles to push the price down to this level. But how long did it take the buyers to reclaim all of that territory? Just 4. 4 candles. I mean, what does that tell you? It wasn't even a fair fight. The buyers are way more aggressive and way more powerful in this moment. So because that powerful, speedy move started right here, we can actually mark this zone on our chart. We're going to call it an area of demand. Why? Because it's an area where we know, for a fact, a huge number of buyers showed up with a lot of money. We should fully expect them to defend this area if the price ever comes back to it. So the price moves up from our demand zone, but then the sellers decide to fight back. We see a red control shift candle with that long upper wick. That's a failed push by the buyers, and it's followed by a red strength candle. While this creates the exact opposite of our demand zone, an area of supply, it's a place where sellers have proven they are in control. Okay, so let's just pause and recap the story we've read so far. We know the buyers showed incredible strength and speed. Now sellers are pushing the price back down, but look how they're doing it. Much more slowly, right? And where is the price headed? Directly back towards our area of demand, the exact spot where we already know the buyers are waiting. And here it is, the key moment. As soon as the price taps into our area of demand, sellers try to push through. But look what happens. They get rejected, forming a green control shift candle. And what comes right after? A green strength candle. That's our confirmation. The buyers are back in full control, defending their territory exactly like we thought they would. Now that we have this clear confirmation, our trade plan basically writes itself. We can look for an entry on a little pullback to our confirmation candles. Our stop loss, that goes safely below the entire area of demand, giving us plenty of protection. And our take profit target. The most illogical place is that area of supply we identified earlier, where we know sellers are likely waiting. And just like we read in the story, the plan plays out perfectly. Price moves up from our entry point and hits our take profit target right at the area of supply. This wasn't guesswork, it wasn't magic, it was simply about reading the narrative the candles gave us and then acting on it. So this all really comes down to one new golden rule. It's a fundamental shift in how you need to look at your charts from now on. Here it is. You should never ever enter a trade based on just a single candle. A single candle is just a word. It means almost nothing without the context of the sentence in the paragraph around it. You have to stop looking for individual signals and start looking for the whole story. The difference is night and day. The old way is being a pattern spotter, just looking for isolated shapes, reacting to one candle, and, well, being wrong pretty often. The new way is to become a story reader. You look for multiple correlations, you identify these zones of control, and you piece together the full narrative to find those truly high probability setups. So the next time you open your charts, I want you to ask yourself, are you just spotting random patterns, or are you ready to start reading the story? Because that simple change in perspective, well, it changes everything.